It's a big week for traders and investors with inflation gauge numbers and retail sales coming in. Pro trader Michele Schneider, the chief market strategist at MarketGauge, is here to cover all of what's going on in the market for us. Mich, what are your three keys?
Well, number one is it's starting out with a rotation back into growth out of value, which was something that everybody thought was going to be a sustained rotation with the small caps, and instead small caps got hit hard last week. So I think that probably means that the market is anticipating that the inflation numbers won't necessarily be much hotter, but certainly not much cooler, and that the Fed, which was almost a guaranteed rate deduction in September, if anything, might be more looking like 0.25% without anything emergency cut in between. So what does that overall mean? Number two is we still have to keep our eye on very key bonds, the long bonds, which are still outperforming. That's the TLT, the SPY, which is somewhat risk off, and the junk bonds, which is still outperforming the long bonds, which is risk on. And that's where we're at. So the third thing would be really my focus, and regardless of what happens right now, given the environment with geopolitical risks, and if we actually wind up with growth stocks continuing to outperform, is to take a look at commodities, which are still so relatively undervalued.
What's your trade of the day?
Well, in that vein, I'm looking at GDX right now, the gold miners. They had a nice correction. However, they're still in a good phase, looking like they have more upside. They actually, compared to tech, had a long-term breakout on this very interesting chart I saw. It's really basically a channel wedge that goes back years. And if that sustains, then we could see these gold miners right now, GDX being the one that we're looking at trading much, much higher in the next few months.
Still going for the gold. Thank you, Mich.
Thank you. You too.
Go to businessfirstam.com for where to see our show on TV.